Impatient. I don't know if I can wait till tomorrow. Your thoughts on who else could potentially go down the route that Woodside's done today?
Well, investors have been quite clear that they want higher dividend yields coming through from the miners. They want to share in a part of the profits, and Woodside's decision is a pretty incredible one today, because usually these growth areas of the market are the low yielding areas. The smallest yield on the market comes from the healthcare sector. That's usually followed by the energy sector, which has a yield for the sector of 2.6%, but that's of course now going to be boosted. And then if we have a look at the high yielding areas of the market, we know things like the banks as well as the property space, a yield of 5.2% for that sector, utilities 5.3%, and topping out with the telecom sector with an average yield of 6% for that sector. Now, if we have a look at yields, these are important because it has been powering stock prices along. As interest rates fall in Australia, investors have been looking for the yield. So Woodside Petroleum proving that the yield play isn't dead. Now, Michael's right on the low debt levels being one thing to consider, but the other thing is the franking credit balance. And if we have a look at Woodside Petroleum, as of its last full-year report, its franking balance was at $3.5 billion. That means it can issue a fully franked dividend. It can release those tax credits to its investors. Now, if we have a look at elsewhere in that energy space, I guess Oil Search and Santos come up next, and they're in very different situations. For Oil Search, we know that their main project is that Papua New Guinea project, so they don't actually pay tax in Australia, which means no franking credits. So you'll notice that Oil Search dividends, none of them are fully franked, and giving an excess dividends really has no huge benefit for Australian investors. Also, if we have a look at Santos, there's some big growth projects ahead, including the Papua New Guinea LNG project as well as the Gladstone LNG project, so that's probably out as well. So we then move to the materials sector, and this is where it really starts to get interesting. BHP Billiton, Rio Tinto. Now, BHP Billiton has a massive excess number of franking credits. In fact, around a huge number, in fact more than the banks. So if we have a look at BHP, $10 billion worth of excess franking credits in its last financial year report. Now, that compares to 2 years ago in 2010, where that was just $4.6 billion worth of excess franking credits. We have a look at the percentage of profits that shareholders currently get. It's only 33%. BHP has been clear that it does prefer to pay out these franking credits in the form of a share buyback because of its shareholder base, as well as the way its shares are traded in other countries. But I think that's the next one to watch, and that $10 billion worth of excess franking credits really does pale, even in comparison to the likes of the bank CBA, which has had about $435 billion as at the end of its last financial year, and Westpac with about $1 billion.
China, and I suppose a lot of the sentiment there. Did we see much of a reaction off the back of those Flash PMI numbers that we got out today?
Well, I think John ran through the main reaction, and that was really in terms of the copper price, in terms of commodity plays. We saw the PMI, the Flash PMI numbers, the HSBC manufacturing numbers coming out of China today. And really this is the first insight that we get into the manufacturing part of the economy in China for the month of April. And of course, we did see quite a big fall from the previous month's numbers down to 50.5. Now, this is the lowest reading that we've seen in around about 6 months. So copper's an important one. We had been watching that $7,000 a tonne level last week, and of course that was breached. So that important technical level means it does look very vulnerable to 6,500, and of course these types of numbers certainly not helping copper prices. So we did see the material sector impacted. Also, if we have a look at the Australian share market, we saw these numbers coming out at 11.45, so you could see that we did have an overall impact on the market, although it was a very positive session for the Aussie share market. The Aussie share market looking very interesting from a technical viewpoint now too. If we have a look at the Aussie market over the last year, this is what it looks like, and the red line is just the 50-day moving average. If I just try and magnify where we're at the moment, and what you'll notice is that we're right up against that red line. So we've just managed to poke our head above that red line, which is at 5,013 points. Market closed at 5,016 points, but another couple of moves up, and that would look pretty good from a technical viewpoint.
Events or any likely outcomes that you think are going to dominate our market in the short term?
Well, this one's been a big week for commodities, not only because of the numbers coming out of China, but also those production numbers that we've seen from a lot of the gold miners, from a lot of the base metal miners. That's really going to continue on during the week. Having said that, while we're seeing the materials and the commodity space in a lot of pain, I think there are a few areas to be watching on the market at the moment. And when we see stocks reaching brand new highs, this is usually a positive sign for the stock and for the sector. And we've seen a number of those signals coming through in the last couple of sessions. One of the areas doing extremely well are the travel stocks. We've seen both Flight Centre as well as corporate travel reaching a 52-week high today. Now, Flight Centre's up 74% in the last year. Corporate travel's up by 123%. So continuing a very strong uptrend. We've also seen Seek and News Corp reaching 52-week highs, doing well. Both of these stocks are up 60% in the last year. And then even in the retail space, Super Retail, JB Hi-Fi as well as Myer hitting 52-week highs. Now, Super Retail's up about 65%, JB Hi-Fi's up around about 50%, and Myer's up just over 30%. So these are some of the areas to be watching. Traditionally, it was really just the high-yielding areas of the market which were running hard, but we're starting to see some key technical signals coming through for some of those growth areas of the market as well.
Julia,